Hello everyone, welcome to the Shikhar series for ABM. As you know, in Shikhar series we are covering all the subjects ABM, BFM, ABFM, BRBL. I am covering ABM and BFM. Today I will be covering ABM Module C Working Capital. Very important, and this is useful in your daily life also, in your banking, those who are in loans. Useful, usually. And importantly, today I will be solving one case study, two case studies. Some numericals, some online objective questions, and then numericals. Okay? So follow the video till the end. Share it with your friends, share it on all your social media platforms, like it, immediately do it. Okay? Chalo, let's start. What are the advantages of keeping adequate working capital? Means why should a business keep working capital? Firstly, what is working capital? What do you mean by this term working capital? Working capital is a term used for maintaining the liquidity. Very important word. Liquidity. Liquidity maintenance. Very important. Working capital is used for maintaining the liquidity. Okay? What happens? Many a times you have a lot of assets, big assets. You have all the machinery, you have everything, but you don't have money to run the daily business. Means you don't have money to pay your salaries, you don't have money to pay some EMIs. Then what's the use? So that's why both the things are to be maintained. Here, in any business, you have to look at two parts. One is long term, and second is short term. Short term. For long term, we have term loans from the bank, term loans. And for short term, we have this WC, working capital. We call it CC also, cash credit. Working capital limits or anything. Okay? So you have to focus on both. It's like riding the bicycle. Whenever you ride the bicycle, you have to keep the handle straight and also keep on pedaling. If anything goes wrong, your handle is not straight, then also you fall down. If you stop pedaling, then also you fall down. So it is like this. Long term is this handle and short term is this pedaling. You have to do it, both of them you have to do it simultaneously. Okay? So working capital basically means your running money, liquid money. How is it calculated? We have a numerical on this. I'll show you at that time. It is called as NWC, net working capital gap. Okay? So the question is, what are the advantages of keeping adequate working capital? One is solvency of business. Second is goodwill. Third is easy loans. And fourth is all of the above. Let's analyze one by one. Suppose if I am having solvency of business. What do you mean by solvency? It means I am having enough money to run the business. Means I am able to pay my salaries, I am able to pay my EMIs, I am able to pay any suppliers. Okay, so I am having enough money for liquidity. That's called a liquid money. If I am having good solvency, it means what? I am paying my suppliers on time. I am paying my electricity bills on time. So what will happen? My goodwill will be established. Goodwill means what? What is goodwill in any business? When you pay your suppliers on time, when your products are very good, even the customer accepts it, then you have a goodwill, isn't it? Third one, easy loans. So if I am repaying my EMIs on time, why not every bank will be ready to give me the loans, right? So the answer is all of these, isn't it? All of these, all of the above. Solvency is also important. Main is the solvency for short-term purpose. Because of this, goodwill happens. Because of this, easy loans. Okay? Move on. According to lending norms, working capital requirement is to be assessed at dash of the projected turnover to be shared between the borrower and the bank. This is actually Nayak committee. Nayak committee had given the recommendations. This one, Nayak. Okay, it was given by Nayak committee. Now you tell me what is the answer. I'll give you the final answer. Is it 10%, 15%, 20% or none of these? Generally, whenever you get such questions, our general tendency is none of these will not be there. It will be either 10, 15, 20. Then we try to find the answers between 10, 15, 20. A, B and C. D generally we say no, not there. So what is the answer over here? You think, everyone? Think over it. Answer is D. None of these. You say what? None of these? Some of you have answered this in the comment section. Everyone answer in the comment section. Some of you have answered it in the comment section, 20%. 20% is sub part of that. Yeah. What does NIAC committee say? NIAC committee says total turnover, whatever is the turnover, below 5 crores. If the rule is below 5 crores, less than 5 CR. If out of total turnover, the working capital finance for that customer should be 25%. Should be 25%. 25% means 25% of 5 CR. So what is it? 125. What are that figure is? 1.25 CR. Out of this 25%, 20% will be 20%. Okay, this will be shared by the bank, and 5% will be shared by the customer. So customer share will be 5% and bank share will be 20%. Okay. So what does it mean? It means that out of this 1.25 CR, 1 crore will be given by the bank and 0.25, 25 lakhs will be brought in by the customer. These will be brought in by the customer. And this is NIAC committee's recommendation. 25%, 20%, 5%. This 20% which you have answered is this. But the question is on this. Question is on this. Okay? So that's why the answer is 25%. Remember, there are 3 methods. One is NIAC committee, second is this Tandon committee, and third is there are others, regression and others. We'll see that. We are having one question on that. Okay? Now this case study, it's a simple one, smaller one. Then we'll be solving a bigger one later. Calculate the maximum permissible bank finance if current assets are 1 lakh, current liabilities are 50,000. So you have to find out MPBF. MPBF, this is a short form. MPBF. Bank always works on MPBF, maximum permissible bank finance. How do you find this out? First, give me the answer. Let me see. What is the answer from your side? Think. Everyone, very simple one. Think about it. Let me see in the comment section. Comments. The answer is, let's solve this. Okay? Say this. First, find out working capital gap, NWC. So NWC is what? NWC equals to current assets minus current liabilities. Right? Current assets minus current liabilities. So current assets are what? 1 lakh minus this is 50,000, 0.5 lakhs. So my NWC is what? 0.5 lakhs. Or you can write it 50,000. Okay? So this is my NWC, net working capital gap. So this is the gap means what? This is to be filled in. There are 2 types of working capital gaps. One is gross, second is net. Gross means what? If I ask you what is the gross working capital, net is this, 0.5. If I ask you what is the gross, gross means this, total current assets. Total current assets are gross working capital, total. Kindly remember this, gross, I'll write this GWC. WC, gross working capital equals to current assets. So here equals to 1 lakh. It's not required in this problem. That's why I have not taken. But this is gross. NW means net. Current asset minus current liabilities. Now how much is the bank finance? Bank finance is always given on this. NWC. So how to get this? NWC. See this. This net working capital gap, whatever you have. So out of same rule, see this, just now I told you in earlier problem, 75% by the bank, and 25% by the customer, margin. Okay? Got it? So this is the way it is done. So now what is your NWC 1.5 lakhs? So 0.5 into 75%. What is 75% of this? You'll get the answer 37, isn't it? 37,500 by the bank. And this is what is the remaining one? 12,500? 12,500 by the customer, margin. Okay, so the answer is B, 37,500. Got it? Simple but logical, isn't it? This will come for 1 mark. This is a question. Just we discussed the Tandon committee, Nayak committee. This is another one. What are the methods of measuring working capital? What are the methods of measuring working capital? Percent of sales method, regression analysis method, operating cycle method, and all of those. So which one is correct? Is this correct, this correct, this correct, or all are correct? I'll give you the explanation for each one. Okay, one line. Okay. So which one is correct? Think over it. Think. Which one is correct? Percent of sales, regression, operating cycle, and all of these. The answer is all of these. Okay? Why? All these methods are used. Percent of sale. This is the oldest method. Oldest. Okay, percent of sales. Oldest method. Whatever is your sales, that much per. What does Nayak committee say? Nayak committee says 25% of your turnover. Same. Oldest method. Simple logic. No much brain work in this. Out of this 25, 20 by the bank, 5% by the customer. Margin. Simple. Regression analysis. This is a statistical method. Statistical. You have done this regression in module A. Right? Correlation and regression. Y equals to A plus BX. Remember? You have done this. Y equals to A plus BX. Here you have many technical terms. This B is known as a slope. A is known as this y-intercept. Okay, but here don't go into the technical maths now. The important part over here is y equals to A plus BX. This is how is the regression analysis plotted. Regression is plotted on the basis of the data which you get. Various points. Suppose if these are my sales figures. Okay, for various years. These are my sales figures. Then I'll try to plot a regression line which is in between all of these. So roughly it will be like this. So this is known as the regression line. Means from the center it should be. All of them should be equidistant. This is the equation of y equals to A plus BX. Okay. Regression can be curvilinear also. See here, it's not only a straight line. It can be a curve also. Y equals to A plus BX plus CX square. You can have this also. Anyways, it's allowed. So, regression analysis is one of the methods. Third one is operating cycle. Just now, what did we do? that net working capital, gross working capital. We are having one numerical also on this. I'll solve that numerical also. Very important one. Operating cycle means Tandon. See here, basically Tandon committee. Tandon committee is based on this. Tandon committee is based on this. Okay. So all the three are the methods: percent of sales, regression, and the Tandon operating cycle. Okay. Under which of the following methods of lending enterprise is required to bring 100% of the entire core current assets and at least 25% of the remaining current assets? First method of lending, second method of lending, third method of lending, none of these. What is all this? First method, second method. All these three methods are relating to Tandon committee. Tandon committee, just now I told you, no? Methods of lending. This is based on operating cycle. Tandon committee has three methods. Method 1, 2, 3. Let me show you. See this. Tandon committee's first method is equal to first method. So net working capital requirement is WC, NWC equals to 75% of 75% of current assets minus current liabilities. Current assets minus current liabilities. This is the method of Tandon committee method 1. 75% of current asset minus current liabilities. Now what is this? Just now we saw it in the earlier problem. NWC, net working capital gap. So method number 1. This is generally used in DP calculations. DP means drawing power. In drawing power calculations, we use this method, Tandon committee method 1. Okay. Now method 2. This method is very useful. Second one. In second method, what happens? We use this while sanctioning the CC. Sanctioning. Whenever we sanction the new loan, CC, we generally use method number 2. What is this method number 2? Here, slight difference is there. Almost same, slight difference. See this. Equals to 75% into current assets. Look at this. Bracket is not there. And then minus current liabilities. What am I doing? First, current assets I am multiplying 75%, and whatever answer I get, from there I am subtracting current liabilities. Okay? So here lesser amount of loan is gone. Bank will finance lesser amount of loan than this. Method 1. So method 2 will have lesser amount of loan than method 1. Tandon committee method number 2. This is used for sanctioning loan, new loan sanctioning. New loan is always sanctioned using method 2. Now there is third method. This third method is this. Core current assets, 100% of CCA we call it. Bank, the customer has to bring in 100% of CCA. Now what is core current asset? Core current asset means your cash. 100% of your cash you have to bring in. So 100% of entire core current assets. Core current asset means cash. Simple, remember. 100% of your core current assets and remaining assets, that is to be brought in 25%. Okay. So this is used in third method of lending. Third. Got it? Kindly go through these three methods again. Very important ones. Okay. Very important methods. Generally in exam, you will get a question on this first and second method. Third method is not there that much in use. It is used in very special cases. Generally, you use this in third method, you use it in some big projects, very big projects, oil or something related to that. Okay, big projects. Generally in our banks, we use these two methods. One is for DP, second is for loans. Okay, new sanctioning of loans. Now this case study I was talking of, very important one. Let me expand this. Able to see this now? See this. Prepare the working capital estimate, working capital requirement from the following information. Now let me expand this if possible. See this. Now expanded. So look at this. Prepare an estimate for working capital requirement from the following information of a trading concern. Projected annual sales is 6,50,000. See this. It's given. Look at the data first. This is an important 5 marks case study. Okay. So projected annual sales is 6,50,000. Annual. Remember the word annual. Percent of net profit is 25% on sales. Whatever is this sales, 25% on sales is my profit. Average credit period allowed to the debtors is 10 weeks. The average credit period allowed to the debtors. So debtors are paying me after 10 weeks. Means what? I am selling the material and then they are paying me after 10 weeks. Average credit period allowed by the creditors is 4 weeks. So those who are supplying me, they are allowing me a credit period of 4 weeks. Okay. So here this debtors means to whom I have supplied. Creditors means the suppliers of mine. Okay. Got this point? Understand the difference clearly. Average stock holding in terms of sales requirements is 8 weeks. So stock holding means this is my inventory, WIP, work in progress. Whatever I bring in, let it be finished goods, let it be raw material, let it be processing. It is for 8 weeks. Look at this, 8 weeks. Now you have to prepare a working capital requirement. Means what should be my working capital CC? Should be the bank finance. What should be my requirement total WC? We have to prepare that. Now how to solve this? Here, I want to ask you the question now. If you can definitely solve it on yourself also. I'll show you how it is to be done. Remember, one basic rule I'll tell you. Always bring yearly figures, yearly, to weekly figures. This is the main logic you have to follow. Yearly figures to weekly figures. You have to do that always. Always bring the yearly figures to weekly figures. Number one. This is the basic which you have to always remember. Annual sales given, everything is annual, bring it to week. How many weeks? These are the weeks, 10 weeks, 4 weeks, 8 weeks. So you have to bring it to that level. So now with this basic, let's solve it. Rule is very simple. Stock plus debtors minus creditors. And then 75% of that. Basic working capital requirement is stock plus debtors minus creditors. This is what you have to do. Current asset minus current liabilities. Okay. Now then you have to follow method 1, method 2, that's separate. But you have to find out first current assets for the given period. Current liabilities for the given period. Okay. So let's first find out current assets. What is there in current assets? Kindly note. What are the current assets? You tell me. Current assets of any firm are current assets equals to inventory. Inventory is also called as stock. Inventory. Okay. Then you have debtors. DRS I'll write it. Debtors. Okay. Inventory. Debtors. Then you have prepaid expenses. Prepaid expenses. Right? And then last one you have, there's one more which is very important, that is called as cash. Cash is another current asset. So these are the current assets. Whatever is given, take it here. All may not be given. In this problem, no cash is given. So leave this. Prepaid expenses not given, leave it. What is given, take it. That's it. Then current liabilities. Current liabilities can be many. Suppliers, suppliers, then payables. Suppliers means payables only. CC, working capital, cash credit. Okay. So whatever is given over here, take that only. Here only suppliers are given. So what did I say? Bring everything to the weekly level. Let's solve it. Debtors. What is given as debtors? 10 weeks. Here in the problem only it's given 10 weeks. 10 weeks. Now remember this these weeks. Debtors 10 weeks, creditors 4 weeks, stock holding is 8 weeks. Okay. You add this because this will be required now. So bring this annual figure. This is your annual figure, right? Bring this annual figure to your required figure. What is your required figure? Required figure is your monthly and weekly. Weekly is required. So debtors are always at cost. So 5,20,000 upon 52 into 10. What is this 5,20,000? I didn't get your point. What is this 5,20,000? See this. 6,50,000 is my sales. What does sales include? Let's see. Here, this is my sales. What is the basic rule of costing? Cost price plus profit equals to sales, right? Cost price plus profit equals to selling price, or SP we call it. Cost price plus profit equals to SP, sales price. Okay. Got it? What is given? Sales price is given as 6,50,000. 650. 6,50,000 is the total sales. Out of that, profit is given as 25%. So 25% of 650. Count it. 25% of 650. Do it fast. Do it. So it will be 1,30,000. So into 25%, if you say, it is 1,30,000. Okay, 1,30,000. You are getting this. Got it? So this 1,30,000 is what? This is your profit. 1,30,000. This is your profit. Okay. So if this is your profit and this is your sales, what is the cost price? Subtract it. So cost price will be what? 5,20,000. 520 lakhs. I'll write it now. So this 5.20 lakhs, you have taken it over there. 5.20 lakhs, you have taken it over there, isn't it? Got it? 5.20. I'll write it. Getting this, everyone? Clear? See this. Again, I'll show you. Those who didn't understand it. See, cost plus profit equals to sales. Okay? Cost plus profit equals to sales. So what is given now? In this, sales is given as 6.5 lakhs. 6.50 lakhs. This is your sales figure. I'll write it a bit bigger. 6.5 lakhs. And the year profit is 25% of this. So 1,30,000. 1.30 lakhs. That is your profit. So what is the cost price? 5.20 lakhs. This is your cost price. So this is C, this is P, this is S. You want it at 5.20 lakhs. This is what is required. Because everything, bank will never finance the profit. Kindly note, bank will never finance the profit. Bank will always finance the cost. Okay? So 520 we take it over here. But this is yearly. I want weekly. In a year, how many weeks are there? 52. So 5,20,000 upon 52 into how many weeks for debtors? 10. Multiply this, you will get this answer 1 lakh. Similarly now, stock plus debtors. Now stock, inventory. What is given? 8 weeks. I told you, remember the figures? 8 weeks. So 8 weeks. 5,20,000 upon 52 into 8. Same. Now model doesn't change. Once you fit the model, it goes on. So you'll get it as 80,000. So this you got it as current assets. Stock plus debtors. You got it. Prepaid is not given, cash is not given. So leave it. Now current liabilities. Creditors are given 4 weeks. Again, same logic. 520 upon 52. Okay, into 4. Okay, so it is 40,000. So this is your current liability. So now you got it, current asset and current liability. Now if you use this working capital gap, what is asked? Find the working capital gap. So 1,80,000 minus 40,000, you get it as 1,40,000. But something more is given. Allow 20% for contingency. It's given over here. So I'll allow that. Add 20%. 1,40,000 into 20%. See this 20% how it comes? 1.40 lakhs into 20%. If you do this calculation, you will get it as 28,000. So add this. This is your 1,68,000. This is your working capital gap, WC gap. You call it NWC, net working capital gap, you can call it. Okay. So this is your NWC. Now how to solve this? Generally what happens, out of this, 75% is given by the bank, 25% is taken by the customer. Generally. So this is the method we follow, and this is the working capital gap to be found out. And you get a question on working capital gap only in exam. Okay, you get it for working capital gap. If you follow tandem committee method number 1, then what will you do? You will follow this method. If you follow tandem committee method 2, then find out 75% of this and then subtract this part, then subtract this part, and then add the contingencies. 28,000 later you add it. But in the exam generally they ask you for this 168. Okay, gap. Now before going, everyone, that was it. Before going, I would suggest everyone to join the new batches. Okay, just now the new batches have started. Go to Adda 24/7. Always go through the app. In the app, you will be getting 1% extra. Okay, go to Adda 24/7. See this. On the front page itself, you will be getting CAIIB Mahapack 2.0. Join this Mahapack. In Mahapack, you are getting 15 plus batches per subject. So you buy for 6 months, and right now double validity is going on. You buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. Plus 81% off is already there. Look at this. Click on buy now. Put the code Y432. Y432. Okay. Click on apply. You'll get it. See this. 80% discount you are getting. Plus 1% extra using the app. 81%. That's why I'm saying download it through the app only. In the app, you are getting 1% extra. Plus you are getting double validity. Plus you are getting this 80% also. Don't miss it. Okay. You can join the new batches also. Focus batch has just now started. Focus batch. Join this. Just now fresh batch has started. Kindly note. Fresh batch has started for focus. See this. Focus batch. Just now it has started. Ebooks, mocks, online tests, best in class material, compatibility, device compatibility. Ebooks are to the level of chapter wise. Tests are to the level of chapter wise. You have doubt sessions. You have AI tool to answer the queries. What all do you need? Plus 81% discount is already there. That is also there. Okay, don't forget this. But code is important. Y432. Okay. 80% discount plus 1% extra, 81, 1% through the app. So don't miss it. Okay. Join